Big developments with the world's most important commodity right here in this video. I'm going to explain everything you need to know. Of course, we've got the situation that's going on right now, escalating the price of oil, causing concern, and for good reason. So I'm going to talk about what's happening. Fundamentally, you're going to see the United States and their production. What about Saudi Arabia and theirs? Oil is all over the place. It is foundational inside our everyday lives. Is that changing? Well, we're going to discuss today. You came here for the truth, so let me unveil that for you. In today's video, I want to break down oil. I want to look at other energy, and I want to make it real simple. Stick with me. We're going to get into this right here and now. We have it. U.S. oil exports hit a record in the first half. And then in contrast to that, Saudi Arabia's crude oil exports slumped to a 28-month low in August. Very different, right? Where we have surging oil from the United States and a cutback coming from Saudi Arabia. Now, Saudi Arabia has made it very clear we are going to cut our production at least through 2024. We'll see what happens. Things are changing very rapidly in this area, but the point is very clear. The United States, I believe they're bringing a lot of that energy online. Much of that is going to Europe right now, who needs it because they have severed their lines in between Russia and them. And of course, winter is coming. So they need this. It's very important right here and now. And they have set up trade with Qatar. They've said, we are going to Qatar to get our natural gas. There's just one problem. Have you heard? It's not going to be up and running until 2026. So we've got years in this period of time that we need to realize there's a shortfall right now. And the U.S. has been the number one beneficiary in this circumstance, all right? The situation between, Europe and Russia, the U.S. is winning. So with Saudi Arabia, as it relates to oil, they can do anything with the price of oil. They could make it go up and down, they could make it spin, and they could do all kinds of somersaults if they want. But right now they're deciding to cut, and as a result, oil prices have remained high. On top of that, you've got what the situation that's been going on, that's been escalating. There are so many different things, and so let's break it down even further. Suez Canal to raise transit fees by 15% from January. So here it is, again, something on top of all of this that could increase the price of oil yet again. And so all of that, think about this, when you see overwhelmingly a lot of traffic coming through the Suez Canal, as we saw, if you remember that one vessel that was oddly like sideways, blocking the whole thing. We know that it does have a dramatic impact, because if you're going to go all the way around Africa, it's going to, number one, take a long time. Some of these vessels do not make it back. And, when you add that, you're adding costs to the whole circumstance. So the whole thing is thrown off. And we have a just-in-time type of inventory. If you've ever heard of this, the way it works is, oh, I can just leave my production, I can leave my inventory off in a different country because I don't have to pay expensive warehousing costs here. Right. That sounds good until you get into 2020 and everything is disrupted and they realize maybe that's not such a good idea. And while we've heard many times, oh, we're going to change that, companies get complacent and the costs are extremely high to do so, and ultimately profit first. That's what corporations do. And so we see this right now potentially deeply affecting the price of oil when we have any form of taxation, blockades, or disruptions. I thought this was interesting, and this is really what I wanted to get to for this video. Investment requirements for the overall oil sector between 2022 and 2045 are estimated at a cumulative $14 trillion in 2023 US dollars. Looking at that $14 trillion, do you think that the governments are going to be putting, let's say the governments of the West, are going to be putting trillions of dollars over the next few years into oil? Or are they going to put it in windmills? And I've heard from many people tell me before that a lot of the windmills aren't exactly operational. However, do you think that the governments are going to invest more, or the corporations are going to invest more into the oil? Or are the existing companies going to just reap the rewards of not enough investment because they get to see the prices rise higher and higher? I think that could be the case. I'd like to know what you think. Do you see more investment in oil coming through? Do you think that these companies will expand, knowing that the green energy and the eco-friendly, all of that is getting subsidized? When you go to purchase something, it has a label, it's eco-friendly, it's green, and so on. And suddenly things are getting pushed to the side. We see that a lot now, where it has it's eco-conscious, so that's going to come in front of you when you're buying a product, and all the other things which might be significantly cheaper are going to be way at the back. We've seen this with Amazon doing it, and of course it's happening in physical retail as well. A lot is changing right now, and I think the whole point I'm going to make here is that we are going to see an inflationary spike, and sticky inflation, meaning it's going to stay around for the foreseeable future, simply for this one reason alone. There's a million printing money in all kinds, but just for this one reason, we could see it become real sticky. China saved $10 billion by buying cheap oil from sanctioned exporters. So, of course, Russia gets the benefit in this circumstance right here, as well as Venezuela and Iran. China's saying, we'll take it, no worries. And so this happens right now as you see these two sides clearly forming, where the Arab world is siding with China, China siding with the Arab world. And we also see that including other countries with the BRICS, in this case here, and also Venezuela too. Citi's mega metals trade shows global markets turning to a glut. Citi has bought up aluminum and zinc in metal financing play. Isn't that interesting? Because the Citi has now become one of the biggest players in the metal markets. You see how they manipulate these prices here? You see how they can drive that up? They could take all the inventory and suddenly there's none left. The price spikes really high. They could dump it back on the market. Price crashes down. They could profit from that too. This is important because with any commodity, this happens regularly. Look at gold and silver. They do this all the time. But know that happens with basically anything. They could drive the price up, they could smash it down, and they do it. And sometimes they get caught, they get in trouble, they get a little slap on the wrist. But know that this is happening. And whenever we have an activity, something that's going on out there, there's like the real fundamentals. But then on top of that, there's speculators. And if it's really exciting or really interesting, you get a lot of speculators. And that could send the price way beyond where it should be, up or down. Keep that in mind. That's my message to you, okay? Look at copper's price curve. Hasn't looked like this in decades. And so we're seeing this. Why is copper important? Well, one of those reasons is electric vehicles. And copper is certainly needed there. They need to buy more of it. And we need to see more coming online, more mining of it, or the price can go higher and higher. And that means the input costs of these electric vehicles would go higher, or at least be sustained where they are, not come down in price, as well as anything else, building materials and so on. The problem here that they're saying, hey, if China's not buying real estate, they don't need as much copper. That's what they're suggesting. And of course, that is true. Just wanted to show you one example of a car company. My goodness, is it a company if it loses this much money? Rivian, you look at one company that just burns money. In fact, I think it was $338,000 for every vehicle. They lose $338,000 for every vehicle that they produce. It's ridiculous. But that's the way it goes. So, all these companies are in the same circumstance. They're just hoping that money comes through. But, here we go. And with all of this, as we alluded to a few moments ago with the investments, where's the money going? Follow the money, right? Well, look at this. Stockholm bans diesel and petrol cars in city center from 2025. So they're saying if you are in the city center, you are not going to be able to use a diesel or petrol car, or you're going to have to pay a tax. And so who does this really hurt? You tell me. Well, I got an idea. It's a way that they can restrict your movement. And they seem to be doing this if you look at it. They're restricting people. We've talked about that a long time ago, that they would do this. So the people are going to have to now, inside the city center, take public transit. And you might say, well, that's good and so on. But should you be forced to? If somebody's got wealth, they don't care. Oh, you got to pay a toll? Okay, here you go. No problem. Oh, it's $20 a day? All right, no problem. But somebody at, the bottom level of income, middle class and below, they don't want to pay $20 a day. They don't want to pay the fees. They're already sinking from inflation. And here you go, putting another tax on top. This is not the way to do it, but they're going to do it anyway. Okay? And so you can disagree with me all you want. I'm interested to hear what you think. What about this? Taxing cheeseburgers could help save the climate. It doesn't matter what side you're on in terms of the consumption of this stuff, but when was the last time I had a cheeseburger? I can't remember. I ate McDonald's, I think, in 2011, maybe. Anyway, looking at this, the point is, this doesn't fix the problem, and somebody's going to benefit, and it's not going to be you. When we look at different forms of energy and how this is all going to play out here over these next few years, understand you got to follow the money. Small nuclear reactors, the answer to big tech's energy crisis. Microsoft hints at its nuclear plans by posting a job for a principal program managed nuclear technology to explore and integrating SMRs into its operations. And they get into others, okay? Interesting, so interesting. What's happening here? I don't know where it will all end up, but know that there are things that are changing today. I'm hoping to see positive developments, but in general, the way we're moving is that prices will be higher for you, not just on your energy, but everything. And so plan accordingly. A new Chile, Argentina, is at the epicenter of a new white gold rush. It's talking about lithium. Of course, again, lithium for the batteries, they're in everything. They're all over the place. Wherever you go, everything seems to have a chip today. So it's got a battery and so on, and it needs that lithium. And there are many places where they're finding this now. It's not just, in one spot. So that's beneficial in that respect. In terms of getting it out of the ground, I don't think it's necessarily the easiest thing, but the point is that you've got to be aware of the trends and simply prepare accordingly. So what I want to show you really quickly is this, and that is all about seeking alpha. If you want to know when something moves and there's a trend, when oil is up, when you see what's happening in the markets, you got to be on top of this if you want to invest. Okay, before you do any investing, you don't just look at it. What a YouTuber did. Oh, he knows what he's doing. I'll buy that. No, you've got to do your own due diligence, and Seeking Alpha offers you a way to do that. And so I managed to get this free trial from them, and it's a 7-day free trial and $50 off if you're going to go through with it, which my understanding is that this could end at any moment. I don't know if they're going to start it up again, maybe Black Friday, but they just told me, the affiliate manager just told me, you can have this for your subscribers. So I put it here, click the link in the description, and you'll be brought over there, and you see my little page on my website. You can get that. This is the kind of thing that you get on the inside of it. This is what it looks like when you're in Seeking Alpha. It just talks about particular companies you may not have heard of. Some, of course, you have. And then it just breaks it down with stock level analysis that I think will be very beneficial to the people looking to invest. Okay, and the comment of the day. Hag, thank you for your comment. As always, love the comment of the day, and I want to highlight that because I realize that most YouTubers don't even look at their comment section. So It's important to me. All right. Silvergate, Signature, and Silicon Valley Bank were the main ones, banks that failed, of course. There are a bunch of other regional banks that are still vulnerable. The banking crisis isn't over yet, folks. That is absolutely true. And what is the big thing? What is the central theme around that? Of course, it's interest rates. So we watch that, we monitor that, and we can see what's going to happen with the banks. And you could do that right here at this channel. I'll bring you all the details. I've been doing that for well over a decade now. And certainly, I put my money where my mouth is. I wrote it in a book, my first book, back in January 2012, all published. I said, look, when interest rates go up meaningfully, we are going to have some issues. Broke that down. Everyone that's read my book knows what I'm talking about. I want to thank you for being here today. You got to come in for tomorrow. We've got some big stuff prepared. I want to see you then. All right, take care.